What is up, you guys? Pete DiCarlo here, helping you grow your portfolio one trade at a time. And for those of you who have been with me a while, you know that transparency is something that's very important about not only my personal and professional life, but especially on this YouTube channel. And I'm here to tell you that truthfully, 9 out of 10 traders fail. And getting straight to the point of this video, the secret to becoming a professional full-time trader is that a lot of people have poor risk management. For those of you who are in my private academy, you know that the biggest thing I harp on all of you about is risk management, right? You have to have proper risk management if you're going to be making consistent gains in the stock market. The stock market is a game of probability. You create a strategy, an edge, you formulate that strategy, and then you test it. And just because you have a good strategy or a good edge does not mean you're not going to lose money. We do not control the stock market. We are the small little guppies swimming around these gigantic sharks, and that's why this is all a game of probability and understanding, and most importantly, not just understanding, actually implementing risk management is the most important thing. Even if you're the best with technical analysis and you're the best technical trader that there is out there, you are still going to lose money from time to time. It's actually true that most professionals are only correct 65 to 75% of the time. And actually, if you implement proper risk versus reward and risk strategy, you could actually lose 50% of the time, but still bring in consistent profits. This video may be a little long, but I promise this is going to be the most important video you have ever watched on trading stocks. And staying till the end of this video and truly, not just watching this while you're, doing work or driving your car, truly understanding what this video is about and implementing it into your trading could honestly change your life forever. As well, if you're a complete beginner and you don't know anything about risk management or risk versus reward, I have a free introduction to the stock market course linked down below. Go sign up for that, take that, and I'm telling you, it's a real game changer for somebody who is just starting. And the first step to proper risk management, and my first secret is of no surprise, but you're going to be wrong, right? You're going to lose money from time to time, and you can't be right on every single position that you take. Like I said earlier, most professionals are only right 65 to 75% of the time. And I've actually realized with myself, I'm in the little higher area of about 70 to 80%, but I don't expect every single trade I put on to make money. You guys in the academy know that. I don't expect to make money off of every single trade that I take. Let's say you have a portfolio of $10,000 and you're only taking trades with a 3-to-1 risk versus reward ratio. This means that if you found a setup that is offering maybe 3% with a stop loss around 1% and you put $10,000 into that position, you would cap your losses at $100. If you lost 4 out of 10 times and capped your losses at $100 or 1% max loss, but you were able to actually make money 6 of those times, you would still end up profitable over that 10 trading setup. Because your 4 losses would add up to $400, but your 6 wins of 3%, which means you would actually net $1,400 over that 10 trade period. You can see that even being right only 50% of the time with this formula and actually implementing your risk strategy, you would still be profitable. Learning to actually cut your losses and minimizing your risk is the key to trading. It is that simple, guys. And this all starts by pre-defining your risk. Any trade that you go into, you have to actually set a strategy for that play, where you plan to enter, where you plan to exit, where you plan to take your profits, where your stop loss is going to be. You have to have all of this predefined before you enter a position. Be patient and take trades that only show a 3-to-1 risk versus reward ratio minimum. Some people even say a 5-to-1 risk versus reward ratio. You can do this through building a strategy or an edge. Through my own studies, I have found that just with ascending and descending wedges that I'm right 80 to 90% of the time. So if I only play those types of plays, which I know I have an edge on the market, and I play with probabilities and I keep proper risk management, there is really no way, as long as I employ all those things, that's the main thing, as long as I employ all of those things and I predetermine my risk, there's no way that I cannot consistently make money. If you guys want to learn how to formulate an edge and create your own strategy in the market, I will put my private stock market mentorship group down below. $50 a month, you'll get the first 7 days for free. We have over 55 hours of courses and lectures. You get access to to our Discord with 265 other members. I go live twice a day. I show you guys what I'm trading, most importantly, why I'm trading it, and it's a great group to be a part of. So click the link down below for your 7 days for free. Once you have defined your risk, you actually have to learn to stick with your stop losses. I know we've all been there. You set a stop loss, you see a stock start going down towards it, and then you move it. And then you move it again. And then you move it again because you just can't accept the loss. When I started, this was the hardest thing, right? I was only looking at what trade was right in front of me. I wasn't looking at the long road ahead, right? If I would have done all the things that I'm doing now 6 years ago, I would be a multi-millionaire, and I truly mean that. Don't get so short-sighted and worry about the next couple of trades that you have. Worry about what things you can implement today that over the next 5, 10, 15 years are going to make you a millionaire. Now, a question that I get asked a lot is, well, how do you know where to set a stop loss? And there are 3 ways to do this. They're going to be based off of a certain percentage, it's going to be based off of a certain dollar amount, and it's going to be based off which is the hardest but the most effective if you stay true to it, which is going to be based on a break of pattern. A stop loss based off of a percentage is pretty self-explanatory. You say to yourself, I don't want to lose more than 1%, 2%, 3% of this position, and you set a stop loss wherever that is. Like I said before, use a 3-to-1 risk versus reward ratio. So say something is sitting at support, you see it could potentially bounce 3% to the upside, you're going to set your stop loss at a 1% loss. Always use a stop loss order if you've been trading for less than 2 years. Don't make a mental stop loss. If you can't sit there and you can't watch the trade, then literally set the stop loss and just walk away. Go about your day and just do something else. The next is going to be a specific dollar amount. So say you have a $5,000 portfolio and you're going in with $2,500 positions, and you say to yourself, I don't want to lose more than $150, or I don't want to lose $100. You determine how much money that you're willing to lose and then set your stop loss based off of that. And this is important when you're learning to define your edge, which I'm going to make a video about that in the future. So make sure you hit the subscribe button and the notification bell so you can stay up to date with all of these trading strategy videos that I'm putting out. This is important because say you're doing a 20 trade sample size and you're gonna test just ascending wedge patterns. You could say, all right, I'm only willing to focus on losing $2,000 testing this strategy. If I have 20 trades, then I'm only gonna risk $100 per trade, so my max loss is $2,000. I don't use the dollar amount stop loss anymore because I feel like using a percentage stop loss is just better, or the best possible one is going to be a break of pattern. This is the hardest to explain and the hardest to implement because you have to actually be diligent with when you're going to set a stop loss. A lot of people say, you know, if this wedge or this flag breaks down, I'm gonna set a stop loss, but then they never do because maybe they set it at the specific break of pattern, it falls down, it goes right to your stop loss, you've been tagged out, and then it rips to the high heavens, and you think to yourself, I'm an idiot for getting out. If that's ever happened to you, you're not an idiot. You did what was right. Yeah, you maybe missed out on some money on that play, but long term, you actually setting correct stop losses where break of patterns are, even if money makers can see it, is what is going to make you a consistently profitable trader. In this example, let's say you have a perfect bull flag forming on Netflix on the 5-minute time frame. Let's say that you enter here, which is where you should be entering a day trade for a bull flag pattern. If the stock rejects and falls below the 5-minute EMA, you should be selling out of this play, and I would probably set my stop loss somewhere around here because it technically broke support and broke this pattern, and now it would be considered a failed trade. Now, of course, if it breaks up and it starts to hit the highs, which would be the resistance of the top of this flag, that is where you'd be looking to potentially take your profits. And of course, you know, if the trade went your way, you could keep moving your stop loss up and up and up, but then you know for sure you're either gonna break even or you're going to stop out with some gains. Yes, there are fake outs. Sometimes potentially a stock will fall out of a flag or look like it's collapsing on a pattern, and then you just keep averaging down and it actually does pop for no reason, holds on a support that you didn't really see coming, and you make a ton of money. And this is what ruined me in the beginning because I would just average down on failed positions. They would end up going my way, and I thought that I was doing something right because I was being rewarded with amazing profits. And in the long run, this is just going to destroy you. Yes, there are times that there are fake outs. There are times when a pattern looks like it's going to fail. You get out and it rips, right? It happens all the time, but it's better to stick to your guns because that's what's going to make you profitable in the long term. As well, if you are somebody who is new, I just overall recommend using a percentage stop loss because that's going to be your safest way. And this is why I tell people who have been trading for less than 2 years, do not trade options. It's not that options are these hard things to figure out. People think that options are impossible to figure out, that they're crazy volatile things that you lose all your money instantly. And they're really not. They're very simple to understand and they are very strong when it comes to making consistent profits with them if you know what you're doing. The problem is that with an option, because it decays, you can't really set a stop loss on it based off of a break of pattern. So I tell people, if you do not know how to set a stop loss mentally and be diligent with it, then do not trade options. It's easier to stick with shares and just set a percentage stop loss. As a way to wrap this up, guys, I just very simply want to tell you guys that you don't control the market. None of us do. You're not always going to be right. It's a game of probability, and it's a great way to make money, but you have to be diligent with your training. You have to be diligent with your stop losses because this is different than any other way of living or way of making money, right? When you go to work, they say, if you do this, you get paid X amount of money. When you go to school, they say, complete this homework, complete this test, you'll get a grade, you'll get to go off to the next level, right? In the stock market, there is none of that. You, and only you, are responsible for your financial future. Nobody's gonna hold your hand and tell you to sell. You have to be diligent with this. I took some huge losses when I first started trading, you all know the story, and I just didn't know how to sell for a loss. So when I came home, I took a whole month off, I went to Miami, and I just relaxed, and I came home. I said, you have to learn how to just take losses. So I would practice just buying, selling for a loss, buying, selling for a loss. It sounds stupid, but it's so hard for people to lose. It's like a huge blow to your ego, but you have to learn how to lose if you want to make this a career. So thank you guys for watching. Hit the like button, comment down below. Do you suffer from this? Do you have problems with stop losses? I want to hear from you guys as well. Hit the subscribe button, and until next time, I'll see you guys.